Hello everyone, I'm Nova Lui, RHB Bank's Head of Investors Advisory. Welcome to our monthly Investment Insight podcast. In the month of May, most major equity markets continue its uptrend with the exception of China onshore market, for example China A shares. US underlying, especially Nasdaq, represented by CCMP in the chart, rebounded by a whopping 6.98%, outperforming the broader S&P 500 and Dow Jones Industrial Average indices. Nevertheless, on 3-month basis, China offshore, represented by Hang Seng China Enterprise Index HSCI and Hong Kong Hang Seng Index are the top performer following Singapore's Straits Times Index STI. China's offshore market was higher in the first half of May, but thereafter trended lower, ending the month with very marginal upside for the month. This is mainly contributed by the tariff imposed by Joe Biden. The US equity market currently has minimal expectation of a rate cut, which has been reinforced by comment from Federal Reserve, indicating that the inflation rate has not decreased to the target level of 2%, despite a reported easing in the inflation number to 3.4% in May. The rally in the technology stocks is extending beyond the top 7 industry leaders. The overall adoption rate of generative AI remains low, suggesting significant growth potential for AI-powered smartphones in the future. Nvidia stock drive the Magnificent 7 index higher, outperforming the Nasdaq and the broader S&P 500 index. Moving on to emerging market, the main market that we need to know is on China. China equity market has a weak second half of May, driven by a few reasons, including Biden's administration to end tariff exclusion on China exports to US. Again on tariff, Biden to hike tariff on China's EV and solar cell, citing unfair market practices by Chinese government that has impacted the US companies. The weakness in the Chinese equity market was then supported when China pledged US $42 billion on a slew of measures to support the struggling property sectors. This includes PBOC will lend to SOE to buy the unsold apartments that has been already been built. Secondly, the minimum mortgage interest rate has been removed. And finally, minimum down payment for the first and second time home buyers has been reduced. While facing the pressure on US restriction export of high-end chips to China, China has created a US $47.5 billion state investment fund aimed to boost its semiconductor industry. With its Made in China 2025 roadmap, Beijing has set to target to become the global leader in various industries, including AI, 5G wireless, and quantum computing. Moving on to Malaysia, Bank Negara Malaysia kept the overnight policy rate OPR unchanged at 3%. The Malaysian economy is experiencing growth driven by continued employment and wage increases, a recovery in exports, and a rise in tourist arrivals and spending. Public and private investment projects are progressing well, and pressure on ringgit has been cushioned from the global event. The Malaysian economy is expected to see continued improvement and moderate inflation, boosted by stronger global trade, effective domestic policy, and supportive monetary policy. After FDI from Nvidia, another major IT company, Microsoft, has announced US $2.2 billion of investment in cloud and AI infrastructure in Malaysia. In the same month, Google has also announced its US $2 billion investment into data center in Malaysia. Malaysia's GDP growth in Q1 has beat market expectation, expanding at 4.2% in Q1 2024 against the market consensus of 3.9%. Ministry of Finance is confident that Malaysia will achieve between 4 to 5% GDP growth for the year of 2024. Malaysia equity market is the only country in ASEAN to post net foreign inflow in the equity market for the month of May. All funds discovery for this quarter has a positive month in May, with global equity market top the market recovery from last month. We remain overweight on equity over fixed income on the back of better global GDP growth and better corporate earnings. Meanwhile, market has mostly priced in the low potential of rate cut, which RHB view is only one time of rate cut by this year. Overall equity market has broadened where most major equity market has shown positive return. On valuation front, investors may also consider diversification to other emerging market countries such as Malaysia equity market, while tactically invest into Chinese equity market. Investors who wish to position early in fixed income is better off focus on corporate bond versus government bond. Any further escalation in global geopolitical tension or material slowdown in China's growth remain our cautious risk. With the latest update we have shared, we hope to have provided a clearer picture of recent market dynamics. Post-April's correction, most equity market has covered back the losses with gains in the month of May. While of the major equity market remains positive on year-to-date basis, we remain optimistic on equity market for the remainder of the year. However, we advise investors to diversify their exposure across a broader range of sectors and market. It's prudent for investors to strategically realize profit or reduce exposure where appropriate. It's crucial for investors to reassess their portfolio and rebalance them in light of the latest market development. We appreciate your participation in our monthly investment podcast and hope that this insight assists you in making a more informed investment decision. For further update, please visit the RHB Merge website to access our latest money chat and podcast series.